Struggling to pass your prop firm evaluation? Look, I get it. Daily drawdowns can absolutely wreck your account before you even get started. But here's the thing. There are 7 indicators that have actually helped thousands of traders hit their profit targets consistently. No fancy bots, no overcomplicating things, just simple tools that work. Today, I'm walking you through each one with real chart examples. We'll talk about why they work specifically for futures like ES, NQ, or crude oil, and how to combine them safely without blowing your account. If you're serious about getting funded, go ahead and hit that like button and let's get into it. So we're covering the classics today: EMAs, RSI, MACD, Bollinger Bands, VWAP, ATR, and pivot points. Now before we go any further, let me be crystal clear about something. No single indicator is magic, all right? The real edge comes from 3 things: confluence, risk management, and discipline. These tools are battle-tested. I'm talking backtests, live prop challenges, strategies from pro traders, but you still need to backtest them yourself and trade on demo first. Trading involves real risk, and past performance doesn't guarantee future results. I had to get that out of the way so we can continue. All right, so why do these specific indicators work so well for prop firms? Think about what prop firms actually demand from you: consistency, low drawdowns, steady wins, and absolutely no revenge trading. These indicators shine because they help you spot high probability setups. They help you manage your stops based on actual volatility using ATR. They keep you out of choppy markets with things like Bollinger squeezes, and they let you ride trends without overtrading. When you look at the back tests on futures, we're seeing win rates around 55 to 70% when these are combined properly. That's perfect for hitting that 8 to 10% profit target without breaching your drawdown rules. Let's start with number 1, moving averages, specifically EMA crossovers. I use a 9-period and a 21-period exponential moving average for trend direction. Pretty straightforward. If price is above both EMAs, you've got a bullish bias. When the 9 crosses above the 21, that's your long entry signal. This filters out so much noise and keeps you in strong moves, which is crucial when you can't afford to get whipsawed in a prop challenge. Number 2, RSI, the Relative Strength Index. Set it to 14 periods. Now everyone knows about overbought above 70 and oversold below 30, but the real power is in divergences. Watch for this. Price makes a higher high, but RSI makes a lower high. That's a bearish divergence, and a reversal is likely coming. Combine that with a support or resistance level for your entries. This is great for mean reversion scalps and prop challenges. Number 3, MACD, Moving Average Convergence Divergence. I use the standard settings, 12, 26, and 9. When the MACD line crosses over and the histogram starts expanding, that's your momentum shift. A 0-line cross confirms the trend. This catches those quick futures moves beautifully, ideal for day trading when you don't want to hold positions overnight. Number 4, Bollinger Bands. 20-period simple moving average with 2 standard deviation bands. When those bands squeeze together, that's low volatility, which means a breakout is coming. If price is hugging the upper band in an uptrend, ride it. If it's touching the lower band in a downtrend, that could be your short. This volatility tool prevents you from entering too early when the market's just chopping around, and that saves your drawdown. Number 5, VWAP, Volume Weighted Average Price. This resets every day and acts as fair value for the market. Pretty simple rule: trade above VWAP for longs, below for shorts. When price bounces off VWAP, that's often a high probability mean reversion setup. Institutions watch this level closely, and prop traders use it for their intraday bias. Number 6, ATR, Average True Range. This measures volatility, and it's absolutely critical for risk management. Set your stops at 1 to 1.5 times ATR from your entry point. Size your position so that 1 ATR of risk equals 1% of your account. This keeps you safely under those daily drawdown limits. This is non-negotiable if you want to survive in a prop firm. Number 7, pivot points. These are calculated from the prior day's high, low, and close. Use R1 and S1 as your targets and use the pivot itself as support or resistance. If price breaks above the pivot, you're probably looking at a bullish day. If it rejects at these levels, that's a quick scalp opportunity. This is a floor trader classic that still crushes it in futures markets. Now here's where it gets powerful. Don't use just one indicator alone. The best combinations are EMA crossover plus RSI confirmation. That gives you trend plus momentum. MACD plus a Bollinger Squeeze gives you breakout momentum. VWAP plus ATR stops gives you intraday bias with proper risk management. Add volume for confirmation whenever you can. Trade during high volume sessions like the New York Open. And please journal your trades and backtest on replay. This exact setup has helped so many traders pass challenges on Topstep, Apex, and similar firms. Let me give you the key rule that ties all this together. Risk small, win big. You're aiming for at least a 1-to-2 reward-to-risk ratio, ideally higher. No indicator wins 100% of the time. Consistency is what wins. So which of these 7 indicators are you going to test first? Drop it in the comments. I'm curious to see. If this video helped you out, go ahead and smash that like button, subscribe for more prop firm strategies, and turn on notifications so you don't miss the next one. Trade smart, stay funded, and I'll see you in the next one.